Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. First thing we're looking at is a chart of the market. This is the E-mini S&P 500 futures contract. Last close on Thursday, November 13th at 9:08 after a meteoric rise from a retest of the lows and actually undercutting the lows a little bit. Looks like the low yesterday was around 816.75. It was around 820 or so, a little bit below in the cash. So roughly the same, but just a meteoric rise of about 90 points. Very impressive was the rise off of the lows. Kind of a fake out move. If we go back and we look, if we scroll back just a little bit, we see this nice gap. This was Monday. This nice gap open higher on the session. A little bit of green bars, but we look down here. Whoa. Very strong divergence here to the negative side. Very strong, strong divergence to the negative sides here. Very strong divergence to the negative side here on Monday. Certainly decelerating these two indicators right here, decelerating to the downside, or decelerating period, headed to the downside. And that was a good indication that the market was not going to sustain this high in the S&P of around, we'll call it 950 on Monday. So that was a great selling opportunity to take advantage of. We actually saw some early indications of bearishness on the Friday prior, but definitely came through. And once we broke below the trend, it was just smooth sailing. Had a break to new intra-session lows around 925, and it was just smooth sailing. Came to a close at 920, but it just continued the next day. A little bit of choppiness. This was on the news that the loan package was going to be modified by the federal government. So yeah, just a strong knee-jerk reaction. We unfortunately got stopped out of some positions on this huge move up, which was unfortunate because we were certainly participating on the profitable side on this move lower. The move did continue lower the following day. We'll continue back over here. As you see, the indications were clearly bearish, for the lion's share of the day, even withstanding this errant move, and I stress errant move higher from a knee-jerk reaction standpoint. And we did get the lower open on Wednesday to continue the slide, again accelerating bearishness. We did see our first sign of positive divergence right here, but it just wasn't enough. I mean, you have three indicators suggesting bearish, and early signs of bullishness did suggest that the market would continue to go lower. This accelerating, of course, meant that we would get a close near the low of the day. It actually continued. What was interesting was yesterday we did finally get full divergences. We had a strong indication of divergence, not necessarily a strong divergence, but certainly a strong indication of divergence given these two. Strong divergence right there. They're certainly bullish given we were seeing these moves to new lows. And we did get some bearish indications on the slide lower, but as you see, everything was diverging. And once we got the move to the upside right here, once we got back above the trend, and saw full green right here, it was just a matter of time. And that, of course, was a move of around 853 to 908, so we'll call it around 50 points, 55 points. So very impressive move, very impressive trading that we've had this week. Let's look at the intraday perspective, how you can capitalize on these intraday moves. And we'll go ahead and switch over to look at a chart of the daily. Go ahead and just minimize that. And it looks like we have, sorry for the delay, 1 second there. There we go. Okay, just clean that up a little bit for you. Wow, very nice, impressive outside bar reversal coming off a new, we'll call it long-term, new long-term low in the cash market, outside bar reversal. The volume wasn't that impressive. It was okay. It was pretty good volume, but based on what we've seen, it wasn't that particularly impressive. But this is the third test, arguably excluding this one, of the low. So we'll see where we go from here. Today is Friday. This was Thursday's bar. 9/11/29 was the close. Didn't quite break above the trend. We did mention that we actually went officially bearish at 889. Still holding on to that official bullish at 889. Still holding on to that official bullish indication, even though we are still bearish from most perspectives now from a price technical perspective, given the reversal to close at the high of the low day following a new long-term low. That's bullish. We are still below the short-term measure of trend, so we definitely need to get above 911. We'll call it 950 to be sure for a quick move to 1,020, and hopefully move on up to 1,200 or so by year's end. I think we can get there. So short-term bullish from the momentum standpoint, still intermediate term neutral, moving to bullish a little bit there. Still bearish fully from trend following perspectives aforementioned. From a directional movement perspective, short-term neutral to bearish, actually a little bit of a bearish lagging emerging indication there. We'll see where that goes, but certainly intermediate term neutral that we do have here after we've had this arguable 6 weeks of choppiness as the market's trying to base. Generally, it'll take about 6 weeks, but this was a pretty interesting event, so we'll see where it goes. Having said that, how are the MiniAnalyst.com portfolios doing? I mean, that's what we'll look at that in a second. Did want to show you yesterday's. This is why it pays to be diversified. Very choppy day yesterday. A lot of our stuff got stopped out early, but just like Pareto's principle, the 80-20, Pareto's law, 80-20 principle, 80% of your money will come from 20% of your effort, i.e. systems or days. You can look at it either way, but this was our day move. The S&P Day Trader 7.0, which was actually our original 1.0, I don't know, 6 years ago. So our hardcore long-term systems really putting up the gains. Goes long. We actually upgraded this to the one and made it the 1.0, and seeing the viability, the still robustness of it, switched it back to and called it the Day Trade or the S&P Day Trader 7.0. Glad we did. Buys at 480 yesterday, closes at 530 for a gain of $5,000 per contract. Just absolutely in stellar gains. Actually, 80% of our gains yesterday were made from that system. $24,000 gain for the Matte Black yesterday. Very impressive day. $24,000 gain. When you look at 19,600 of it came from the Day Trader 7.0. Now this is our original Matte Black, and this is our original Map DT. Map DT gains $9,545 yesterday, for an astounding 47%. Again, a large part of that due to just one system, which is why it pays so well to be diversified. Excuse me, pardon me. So there we have it. Let's see, we'll go ahead and look over at the 4-day performance of our portfolios. Very impressive. 65% for our original Map DT, 23% for the Map Black. Again, acting like a kid, a very aggressive kid with putting up those stellar numbers for the Map Black. Our most diversified portfolio up 23%. 33% for our Delta B, that's coming in third place. Dual Day Trader and Triple Threat didn't really fare so well, at least this week over the last 4 days. But having said that, over the last where did you go? There you go. 34 days, Dual Day Trader still in the lead at 316%. Now the Map DT with that performance up 340% over the last 34 days. This is, of course, since the market topped. And we keep losing that. Then there's, of course, the 78%. Again, Dual Day Trader close to 500%. Map DT again in first place. Original Map DT at 477%. Still 240% almost for our most diversified Map Black portfolio. If you guys are interested in subscribing to any of our Map DT portfolios, just go to the website and enter promo code video, and that's actually not going to change. So just go to the Platinum Day Traders, pick you out a Map DT version 2.0, for instance, right there. Enter promo code video, and you can save $300. So if you have any questions, feel free to go to the website, chat with the support team, or shoot us an email to admin@MiniAnalyst.com. And again, we hope you are having a great trading week, and have a great weekend.